If I'm giving advertisement to the public stating that we are inviting you to subscribe the shares of the company, that is nothing but a prospectus. A person or persons are going to support for its formation. We are going to call them as a promoters of the company. Assembling means joining the information into one part and then taking the decisions for the betterment of the company. I'm Professor Rajesh L.R. from Department of Commerce and Management, Vidhyaashram First Grade College, Temple of Excellence, MYSURU. In our previous session, Unit 2, Formation of a Company, we have discussed about what were the documents required and what was the procedure was there to form a company. In that session, even we have discussed about what are Memorandum of Association, Articles of Association, and other information related to the formation of the company. Even we have a little bit information we have discussed about the prospectus. In this session, we are going to discuss about the meaning of prospectus, object of prospectus. Even we are going to discuss about the stages in the formation of a company. How many stages are there for a public company and how many stages are there for a private company, and which stages they have to follow, and when they are going to receive a commencement of business certificate and commencement of certificate of incorporation and certificate of commencement of business. When they're going to receive, and after receiving that document, what is the duty of the private company or a public company. Each and every concept we are going to learn in this session. Prospectus is the first topic what we're going to discuss about the document which is required for the formation of a company. Meaning, according to section 270 of the Companies Act 2013, a prospectus, notice, circular, advertisement or any other document inviting offers for the public for the subscription or purchase of any shares or debentures of the body corporate. They are saying that if I'm giving advertisement to the public stating that we are inviting you to subscribe the shares of the company, that is nothing but a prospectus. Or giving a notice. Notice is nothing but communicating about the company. Company is calling the public to invest in the company. If they give a notice to the public stating that for the investment concept here, it is nothing but a prospectus according to the section 270 of Companies Act of 2013. Objects of prospectus. What are the main objects of the prospectus here? To inform the public about the forming of a new company. Means the duty of the prospectus is nothing but we are communicating that a company is going to be formed. A company is going to be formed in future and in the upcoming days to induce the investors to invest its shares and debentures. They're saying that invest in the new company, that in the form of shares or debentures, and you're going to get more benefited in the investments, and the ROI we're going to give more, and your amount of investment also will be taken care in a safety and other purpose here. To preserve an authentic record of the terms on which the investors have been invited and to make the directors responsible for the statements in the prospectus. They're saying that for what purpose we are inviting the public and how they're going to use the amount for the business activities. All the responsibilities are taken by the board of directors about the portfolio of the funds here. And the next part here, what are the contents? And it is contents of prospectus, whatever we are going to discuss here, it is compulsorily, they're going to ask for your examination purpose, where you can score the marks very easily if you write the part, whatever we written here. There are three parts are there, part 1, part 2, and part 3. Part 1 of schedule 2. Part 1 of schedule 2 says that general information should be provided. What are the general information we are going to provide? Like simple, the name and address of the company, the name and address of the board of directors, we are going to inform here. And part 1, schedule 2, second point will be capital structure of the company. They are saying that how you are going to divide and how you are going to invest the amount. What is your capital structure? Means the structure of the entire amount, how you are going to use or you are going to generate by the company here. The next year, the terms of the present issue. If already you have issued any shares to the public here and yours is the next second issue of the shares, means what are the terms and conditions are about the concept here. Particulars of the issue. Issue means the shares have been issued, how we are going to collect the amount for the shares. These concepts are to be written in this one. And part 2, schedule 2, general information, financial information, statutory norms. Schedule 2 of part 3, any report part of 2 and any report by accountants regarding part 2 of the schedule here. So in depth we are going to learn now one by one here. In the part 1, as I said you people, general information means here providing the name and address of registered office of the company, providing the detailed information of the company to the public, where is the registered office and where is the main business activities are taking place now. And the second one, date of opening of the issue, when the shares are going to be issued to the public. The dates are mentioned here, and the name and addresses of the auditors and the lead managers will be provided in the information. That's saying that one we are going to provide even who is the auditor and who are the responsible person to do such process here. And the next one, as I said you, capital structure of the company. How the capital has been divided. Authorized capital, issued capital, subscribed capital, paid up capital. Authorized capital is a capital which the company authorizes to issue to the public. Means they are saying that one, this is the amount of funds we require here, and we are saying that one, this is the limit authorized for the company to issue the number of shares. Issued means out of authorized. For example, if the company decides to have 500 or 50 lakhs here authorized capital. If company wants only 40 lakhs, it can issue 40 lakh shares to the public here. It doesn't want to raise 50 lakh. Out of 40 lakh, whether the public have subscribed the full amount 40 lakhs or less than 40 lakh. So that is called subscribed capital here. Out of subscribed capital now, the paid up capital. Paid up capital means here nothing but the company is going to collect the share amount in the application, allotment, first call and final call. The amount are split into 4 parts here. For example, if it is 100 rupees, application 25, allotment 25, first call 25 and final call 25 here. So they have split the face value into 4 parts here: application, allotment, first call and final call. And if the company has made after allotment, all the call money has been made by the company here, and if any shareholder has not paid the first call money, then it is going to be called as a paid up capital, where a shareholder has not paid, even though after sending a notice to the shareholder, and this is the amount what we have generated from the public. Terms of the present issue. What is the terms of the present issue? Whether right of the instrument holders, means right of the instrument holders is nothing but here, if the company is issuing the shares for the second time to generate the funds from the market here, so then the preference has to be given to the existing shareholders and not for the public here. Second one, how to apply, availability of forms, prospectus and mode of payment. They're saying that when the second term will be how to apply, means how the public can apply for the subscribing the shares. What are the forms are there, and whether they're issuing the prospectus or not, and what is the mode of payment, whether I have to make online payment. If it is online payment, how we have to make that one and how much we have to make, and if there is any special tax benefit for the company and its shareholder. They're asking that one, if I invest in your company, whether a shareholder is going to get any tax benefits or not. All this information should be there in the part 1, schedule 2 of the prospectus contents. And the second and most common here, what we have here, particulars of the issue. Means here, the 4th point in the first part, it comes here, very simple. What is the objects and what is the project cost it is required? Means my object is to serve for the society and support for the society. If I say, and for that one, I want nearly 100 crores is required for the project here. What is the project cost is required? 100 crores. And this 100 crores are generated from the public, and the amount will be invested on this project, and which will get succeeded, as well as even the investors can earn like anything. They would have been not believed that this is the amount of benefit they're going to get. And even in the fifth point, they have to say that when about the company, management, and the project, and history and main objects of the present business of the company. What is the history? If it is already the company has existed in the market, now they have to say that one, their history, when they started, how they started, and what was their position in the initial stage, and how they moved from 10th level to the 2nd level, and now what is their intention, and what is their service, and what type of investment strategies they are applying to grow in such a way that would faster way to reach that position. And they have to inform who is the promoter and their background, who is giving suggestions for you people to invest on new projects here, who is suggesting you, why he is suggesting that to invest on these new projects, whether the investment will be worth or not. Everything will be guided by the promoter. And what are the infrastructure facilities are there for raw materials and utilities? They're saying that one, what type of facilities are going to be provided for the raw materials or for any other materials here. And nature of products, what type of product you're going to produce. Already the product is available in the market, a similar product are you going to produce, or a new product are you going to produce, and which supports you people to earn money. So each and every concept has to be informed here. Approach to marketing means whether you're going to apply the news analysis or you're going to apply the SWOT analysis, what are the marketing strategies are adopted for the sales of your products, which will be very new in the market. And even we are going to discuss about the concept called part 2 of schedule 2 in this one. Any report by part 2 of the schedule 2, either first one, indicate by way of note any adjustments as respect to figures of any profits or losses or assets and liabilities dealt with any by the report which appear to persons making the report necessary. They're saying that one, the prospectus even includes all the detailed information of all the assets and liabilities of the company, including the profits, what they have done, and how it has been distributed for the existing shareholders, as well as who has prepared the report and how he has prepared the report for the purpose of the public. Making those adjustments and indicate the adjustments being made. If the financial advisor or the accountant has prepared the statement, if he has made any adjustment means the adjustments which are made after the preparation of statement. Like for example, 31st March is the last date to prepare the financial statement. If any incident has taken place for the purpose of the 31st March or 30th March date on 1st or 2nd of April. So those adjustments will be recorded in the statement. If they have made any adjustments, like it may be related to depreciation, or it may be related to a stock, or it may be related to outstanding, or it may be related to accrued income, or it may be related to payment of dividend or payment of taxes or making provision. If any adjustments are made, just provide the detailed information. And any report by accountants required by Part 2 schedule shall be made by accountants qualified under this Act, appoint as auditors of the company. They're saying that when in the prospectus clearly mentioned the audited report of the financial statement. The statements is nothing but here, trading account, profit and loss account, balance sheet, as well as cash flow statement. All the 4 statements should be provided to the public before they think about the investment here. Now, the next concept what we have here, steps in formation of a joint stock company. Means if I want to start any company here, what are the steps are there? And the steps what we have here, first stage is promotion, second one is incorporation, third one is capital subscription, fourth one is commencement of business. It is nothing but they are saying that one in formation we have 4 stages are there. The first stage, the first foremost stage comes here, promotion. Promotion means we are promoting about our business details to the public. that we are going to start a company and this is our company strategies and this is our company objective are there. We are just communicating to the market about the requirement as well as all the details are provided in the stage, and even we are going to verify, that is we are going to have the feasibility solutions will be received from a person who is going to support our business is none other than a promoter who is going to make the feasibility solution, either it may be related to economic feasibility or financial feasibility or any other feasibility requirements are there, means he is going to check that one and make out in such a way that which is better for the company, when they have to start, how they have to start, and what they have to do, and if they want to generate the money, how to generate the money. Each and everything will be made by the promoter. After the stage promotion, the next part it comes here, incorporation stage. Means now in this incorporation stage, it is nothing but, so now what I have to do in the incorporation stage, whether the company, after promoting about its company's concept, what is their objective and other part here, now they have to say that what is the amount of capital is required and how they're going to use. The first stage, what we have, promotion of a company. The person who undertakes responsibility to bring company into existence are called promoters. As I said you people that one, at the time of formation of a company, a person or persons are going to support for its formation. We are going to call them as a promoters of the company. The steps which are taken by the number of persons to come together for the achievement of the common objective through the company form of organization are called promotion. Means certain people are coming together, joining their hands and stating that one, we are going to form a company and we are going to achieve the goal, whatever we have here. According to Gottman and the Douglas, a promoter is a person who assembles the men, money and the materials into going concern. They're saying that one, they're going to arrange the required men, money and material to start a company and for a going concern company. Means when I start a company, my intention will be always, as say that it should be not less than 500 days or it may be continuing. Even though I'm not there, the business has to be continued here. That is the main concept should be there at the time of formation of a company. Next step will be a discovery of an idea. First, the promoter has to discover an idea. The promoter starts out with an idea to start the business either in the new field or in the commercial existing lines of the manufacture or business. That's saying that one, the first step of the promoter is nothing but discovering an idea. Now, the idea, it should be in such a way that whether we have to start the company with a new concept, a new product to be launched, and how we are going to launch that product, and whether our business should be a commercial business or it should be industrial business. He's going to analyze all the things and then he decides what they have to do. Detailed investigation. After deciding which business has to be formed here, they have to make a detailed investigation. The promoter needs to make a detailed investigation of his idea with the assistance of many experts. Means he's saying that he has to go and meet certain people and collect this information. Based on the suggestions given by the experts, then you have to decide that whether can I invest on this proposal or not. Simply, if anybody comes and says you that this proposal is very good, go ahead with the investment. We should not invest in such projects here. First, we have to analyze whether whatever the amount I'm investing, either it may be the entire funds, it may be my own funds, or the amounts is borrowed from the public. So now it is not my money, it is a public money where we are investing on the project here. That should not be lost here. For that reason, before starting the project, they should see that whether the company is going to earn some benefit or not from this project, whether it is suitable for our market or not, whether it is suitable to present environment where it is not going to harm the environment and spoil the society here. After making all those things, they have to decide the concept here. Next one, assembling. After detailed investigation, now start collecting the information. After collecting all the information, make that. Assembling means joining the information into one part and then taking the decisions for the betterment of the company. The next one will be financing the proposition, means after assembling all arrangements has been made, now joining all the information together, now we'll decide on that one, what is the amount of funds required for the business. Now, how do you going to divide that one? Whether the entire amount of funds are to be, whether the amount of investment should be made by the members of the company only, or let me rise from the public in the form of equity shares, or in the form of preference shares, or in the form of debentures, or let me rise in the form of bank loans. Now they have to decide that one, whether it is a owner's fund or borrowed fund, and how they're going to divide that one, and how much risk is involved for them. They have to analyze each and everything, then they have to finalize about the process here. The second stage, as I said you people here, it is an incorporation stage here. In the incorporation stage, the first thing I have to get the approval of the name of the company. That's why we say that one as run. What is run here? Reserve unique name of the company with the ROC, and then decide what you have to do. For that reason, the promoter has to submit a name availability form and submit that one to the ROC. ROC, where we have to submit the run, the form of the name, what we have proposed, name has been selected for the company, and that should be, so with the necessary fees payment, I have to submit. And the second one, filling of documents for registration. An application has to be filled with the ROC along with the following documents. First, I have to fill up the application. Then I have to submit with that application. The first document will be Memorandum of Association. The second document will be Articles of Association. And the third document will be the notice of the address of the registered office of the company, and copy of the letter received from the Department of Company Law and Administration of the government, giving intimation about the availability of proposed name of the company. After getting the run year, the name approval from the government, as well as availability from the Department of Company Law, so the same copy has to be submitted along with the registration application form to the ROC. If I don't submit the copies, the company's registration cannot be made here if any one of these documents have been not submitted here. Memorandum of Association is related to external part. Articles of Association is related to internal part. And notice means here a letter has to be made in the address of the registered office of the company. Means we are going to start our business activity in this premises, and it is going to be our registered office, and all the decisions will be made from this place. Like this, all the documents has to be submitted. And next one, the statutory declaration stating that all the requirements of the Companies Act have been compiled. Means they're saying that one, all the statutory declaration means as per the Companies Act of 2013, we have submitted all the documents as per the government norms or not. And next one, a statement of nominal capital of the company. Means they are saying that one, a statement has to be given for the ROC. What is the total amount of the project what you're going to start? That is nothing but what is the total amount of capital is required to form this company. And next, the details of the person, the name, address, occupation, who have accepted to act as the first directors of the company. They're saying that when the promoter even has to submit the detailed information of the name and addresses of the directors who have agreed to become the first directors of the company. And the written consent of the directors to act so means not only list of the names of the directors who are going to act as the first director of the company, even they have to collect, the promoter has to collect a written consent. Means the board of directors have to write and they have to submit those copy, a consent copy to the promoter. Those copies has to be submitted to the ROC. And undertaking by the directors to take up and pay for the qualification shares. Means each and every director has to buy some shares of the origin in the initial stage. That is called qualification shares. And even that mention particulars of managing director, manager, secretary of the company. Who is going to manage the business and how many people are there to take care of the business here, and who will act as the manager and who is going to act as the company secretary of the organization. And the third stage we have here, capital subscription stage. Rising the share capital of the company means if it is a private company, to start any business immediately after incorporation, but a public company having share capital can commence business only after obtaining another certificate called certificate of commencement. They're saying that one, if it is a private company, after receiving certificate of incorporation, it can start to generate funds from the public. If it is a public company, it has to start generating the funds only after receiving certificate of commencement of business, not after certificate of commencement of incorporation. In this stage, the company has to make arrangements. Means they are saying that in this stage means the subscription stage, the company has to make arrangements for obtaining the necessary capital for the company. Means now, if I say that I require 75 lakhs for this project here, it has to make necessary arrangement to raise the funds from the public. So that is the information what we have here, and issuing the prospectus to the public and getting the minimum subscription from the public. And in the rising of share capital, the next concept what we have here, after subscription, allotting the shares to the public here. Whenever the public has applied for the shares to the company, the share are to be allotted for the application received by the company, and allotment may be made based on the number of applications received. If it is received excess, we are going to call it as a oversubscription. If it is received less, undersubscription. If it is in the case of oversubscription, always the company will think that let us make the pro rata allotment. If it is undersubscription, they'll allot all the shares to the public here. They'll never make the concept of pro rata here. And after allotment of the shares, they're going to send a letter to all the shareholders stating that the shares has been allotted for you. You have to make the certain payment for the organization, the allotment fees for the company. The next and the last stage of the company, commencement of business. After obtaining commencement of business, the promoter should apply to the registrar together with the prescribed fees, granted only if the following conditions are fulfilled. That's saying that after receiving certificate of commencement of business, the promoter has to submit a copy to the registrar by paying certain amount of fees, and then if it is fulfilled, a prospectus or a statement in lieu has to be filled with the registrar. Submit a prospectus copy, and company has received the minimum subscription amount, whether we have received the minimum subscription amount or not. For example, if it is 50 lakhs, whether at least I have received 15 to 20 lakhs amount or not. If I've received that then I can start the company here. If it is not, they'll not allow us to start a company here. The directors have paid the application and allotment money payable shares to held by them. They're saying that whether the board of directors who accepted to act as a first board of directors, whether they have paid the application money and they have subscribed the shares or not. And the declaration from all the directors and the secretary has to be submitted to the company. This is the concept what we have here. And in today's session, we learned the 4 stages what we have in the formation of a company. The first stage was promotion stage, and the second stage was incorporation stage, and the third stage was capital subscription stage, and the last stage was it is a commencement of business. Now, in these 4 stages, we have learned which are the documents are to be submitted to the ROC, when they have to submit, and how they have to do. All these things we have learned in the present session. Thank you for all and good luck.